Hey, Joshua Phillips here with Churchill Mortgage, sending out a market update, not only on behalf of myself, but also my wife, Amy, our son, Jesse. We are the Phillips team here at Churchill Mortgage. As I always like to say, if you're working with the Phillips Churchill Mortgage, you are in great hands. Well, it is October the 3rd. Boy, the year is going by rather quickly, and we're into the last quarter of the year. Listen, today's market update will be pretty brief here. Now, let's start here on the CNBC.com, which is one of the sites I always keep up, and we often will talk about U.S. Treasury bonds, and this is the Treasury bond yields right here. So you can see this is something you can look at yourself anytime. 10-year Treasury yield currently at 4.12 in this chart. We want the yield to go down. And we saw, let's see, this is the last year. Let's just pull it up to maybe the last quarter. We have seen it going down. It bottomed out. We actually hit 3.99 right about the time on the 10th that the Fed was announcing the Fed fund rate cut. And as we had talked about, that happened last year, we've seen mortgage rates, we've seen yields go up a little bit, and also mortgage rates up slightly. We're just kind of sitting here at 4.12. We want to see the yield. Think about it this way. Mortgage rates sit about 2% on top of the 10-year Treasury yield. Basically, the way that I think the market thinks about it is the 10-year Treasury yield is like the most safe, secure investment. You can get a 4% yield on that. Mortgage bonds, mortgage-backed securities are not quite as safe and secure, and so there's a premium on top of that of usually about 2.25, probably about 2.25%. Okay, it depends on the loan terms and 15-year, 30-year. So anyway, but that's where it sits on top of that. Now let's go over here to our mortgage-backed security chart, which is what I always like to pull up, and I always say that this is what every professional loan officer in America looks at to keep an eye on what happens with mortgage rates. Green is good and red is bad, and the higher the security price, the better mortgage rates are doing. And you'll see in this chart, again, we kind of peaked right about the time of the Fed cutting the Fed fund rate 0.25%. And, we kind of see, boy, this line here, resistance right here. It's kind of interesting to see how many times poke that we tried to break through that line, and then we've kind of come back down to the 25-day moving average, and we're kind of sitting, just hovering right around the 25-day moving average. If we step back, always helpful sometimes to get a longer perspective. Let's get a 1-year perspective. We are seeing rates, really at around the best levels last year. Here's the thing. Rates are very close to the best level we've seen the last year, really the best levels we've seen in the last 2 or 3 years. So we've fallen off slightly. Let's say over the last 2 weeks, rates are up 1/8%, 0.125. So not very much, and rates are still quite good. The big question mark is, what are rates going to do next? The answer to that is, I have no idea, and I've been doing this for 27 years, but that's the honest answer. There's no way of knowing. We do expect the Fed to cut the Fed fund rate twice more this year, maybe 0.25%, another 0.25%, but as we see, and we talked about every time, the Fed fund rate is not mortgage rates, and sometimes the mortgage-backed securities have a negative reaction, and the bonds have a negative reaction to those Fed cuts. And I would say too that the mortgage rates have already improved since April about 0.75%. So if we want to say that's going to give us some sort of benefit, we've probably already seen the benefit. In other words, the markets pretty much expect that to happen, and so when what is expected to happen happens, sometimes it doesn't move the markets as much as we would hope it would. But rates continue to be at or near the best level they've been in the last year, really about the last 3 years. We're about 1/8% off from where we were 2 or 3 weeks ago when we hit our best levels, but we're still very good, and we're still hanging on to our trend line for the positive. Now, that trend line may not last. I mean, you can see here this this is the 25-day moving average, this red line. We are hanging on to it. We've been above it now for, a couple months. And I will say, if you're looking to refinance, take a serious look at it right now, or if you're looking to purchase, it's a great time to be writing a contract and locking in interest rate. Anyway, let us know how we can help. Feel free to reach out to myself, Amy, or Jesse, whoever you're working with on our team. We're here to help. We're here to have a conversation about what rates are for you on different loan programs, different terms, and of course also help you get pre-approved if you need to get pre-approved. Anyway, have a great early fall weekend, and we'll be in touch. Bye-bye.